All right, chat. All right. Come on, look. Y'all know what it is. I'm gonna put y'all on with a little something. I was just looking into this. I don't know. Should we invest? Should we not invest? Well, y'all tell me what y'all think in the comments, man.
You, just you, building your app on Base 44. Describe it.
So let's turn to our big story number three, if you want to call it that. And that would be SpaceX, which is again coming off its first down day as a publicly traded company.
Down day.
Today goes to 250 at Oppenheimer. I did an unofficial survey of our amazing production crew here. If anybody had bought SpaceX, I didn't see a single hand go up. I'm wondering, how the retail investors should be viewing this after some big moves up, and then now a couple of days down.
There are two types of people who have been involved in SpaceX since it came public. Not free, because that's a lot of tech investors, etc. Since it came public. You have people that believe in Elon Musk and believe in the story and really don't care if the stock is up or down 15% from where they initially purchased it. I don't know how large that population is, but I'm assuming it's probably half to two-thirds. It's the other group that you got to talk about here. That other group, they're not buying the stock. They're buying the potential returns of the stock. They want the sizzle, not the steak. The problem is the sizzle's gone. So those people look up and they say, well, I'm in this thing at 140, 150. I probably should have sold some at 215. 210, 205. Okay. You know what? This thing's over. I'll revisit it the next time it's rallying. Those are the sellers today. They're not actually investors. They bought the sizzle. They're not here for the steak. The dust will settle. The people who want the steak, I think will buy this dip. I wouldn't get terribly afraid of it.
Right here, you have to wait, though, until you get closer beyond the lockups.
The lockups are going to start earlier than ever. So 5 weeks from the first tranche, 5 weeks from the first tick. We're not accustomed to that in this market. We haven't seen it before. They did it with Cerebras, and we haven't even seasoned that IPO yet to be able to make a judgment. And of course, Cerebras is not.
Not to mention, it's going in the queues in like another 10 days.
That's in the stock.
So that first tranche is somewhere in the second week of August. But it's important you say that when the dust has settled, we have been observing how it's trading. It's important to understand the mechanics of how it's trading, because this is a sentiment play. This is not a fundamental story in the near term. Sentiment on what? It's a sentiment or reality call. It's a sensibility play. You can't. I mean, how do you make a fundamental case around it? Take the calculated 2030 revenue on a $29 trillion. Useless. Pencils calculated useless. It's a referendum on Musk. But you observe the way it's trading. So let me give you this statistic. What we're seeing now is that the range expansion dust is settling. The range expansion is actually now beginning to compress for the very first time. Today, you have the tightest range that you've had so far since the IPO. You were generally running 24, 26, $30 high low inside. Today, it's getting tighter and tighter. What does that mean? That means price discovery is beginning to work. You're getting the transparency, and you're beginning to see the actual price level that it should find itself its comfort zone. So I think it consolidates probably in this area a little bit under $200. Those first 3 days of trading too. Please remember, you had billions of dollars coming into 2X versions of SpaceX. Again, we didn't have this 5 years ago. The last time we had mega, very large IPOs, you didn't have as much leverage coming into the derivative side of the trade that quickly. Joe and I come from a time originally when it would take 6 months to get options listed. So it's a whole new ballgame. And sometimes what happens when there's this much excess enthusiasm, you pull forward what would have otherwise would have been 6 weeks worth of gains. They might have pulled the first 6 weeks worth of enthusiasm for the stock into 3 days. 1.8 million contracts traded in the option market on the first day. That is a record. For an IPO, we've never seen anything like that before. arguably one of the biggest beneficiaries, if not the biggest to this point, Goldman Sachs. Right? The fees that they will make off of this in an environment where the capital markets have returned with such vigor. Goldman Sachs has shattered deal-making records. This was as of yesterday. $1 trillion in the first half in M&A, according to reports. Yeah. The fastest to ever reach that milestone. It's the firm you probably had. Morgan Stanley had a big role in the IPO as well, but Goldman stock got over $1,000. It hasn't really looked back. You own it. I have for the last 2 years. I've owned it. I've done personally fantastic with it. The stock. The company has done such a good job. David Solomon and the executive management team has really looked at the business and skinnied it down and said where exactly can we isolate on the strongest revenue growth, and that's the activity surrounding trading. That's the activity surrounding M&A, the advisory business, and they're executing on it. To be fair, a lot of what he had to unwind was also some of his projects. Well, to get there. But he had the fortitude to admit that they needed to pivot. And I'm fine with change and making that change and moving forward in the right direction. He's done that. It's Morgan Stanley's. I think there's a bigger conversation surrounding the financial, Scott. The financials seem to be making a return, if you would. It's the top sector over the past month, okay, up 5.5%. It's been a central part of the moves away from the money going into tech. Right. It's been finding a home here, in part because of what I said. The capital markets and the return between, this could be a record year for M&A. You get the SpaceX IPO. You don't think Goldman's going to have a central role in Anthropic and OpenAI as well? We have a capital market cycle that's in full swing for the first time since 2021, and the difference between this and 21 is the quality. These are companies, you may not love the initial profitability, but these are companies coming in with billions and tens of billions in revenue, especially in the case of OpenAI and Anthropic. I don't think it's a fair comparison to look at the 1,000 or so IPOs we did in 2021 and say that this is the same type of capital markets boom. You just bought JP Morgan. I did. JP Morgan. Welcome to the club. JP Morgan's a name that I've traded in and out of over the last several years. Done particularly well with it. We've held it in the ETF. We moved out of it around 315. I wanted to restore position if it got back above 330 because I expected it to take out a new all-time high. It's in the process of doing so. Today you have a little bit of a pullback. I'm fine with that pullback. Look, the financial universe is really strong, to your point. It lends itself into areas like T. Rowe Price, like interactive brokers. I have talked, and I'm going to continue to talk about this because I feel like I'm helping the viewers. Virtu Financial is the play on high frequency and market making. When you look at the return from Jane Street, which is a private company, Virtu Financial is the only way to get that exposure. I'm friends with the executive management of the company, but you're talking about a stock that's at $62 now. Scott, we were talking about that in the 30s. You still like the exchanges too out of this group? By the way, we didn't have a chance to do this yesterday because we were listening to the president out at the G7. But I just want to give a shout to Terry Duffy for the transformational impact that he's had on CME Group. Announcing yesterday, of course, that he's no longer going to be CEO coming up, but he's had a remarkable run. I think you own it, like it, have picked it. I've been deserves a shout. Speaking of Fred, he's a friend of the network. He's done an incredible job at CME Group up in Chicago. 24 years. I had the privilege and honor before my CNBC life to know Terry, to be involved with him professionally. I believe we own CME in the ETF. There are some questions in front of CME as we move into the future as it relates to 24/7 trading, as it relates to perpetual futures. Lynn Fitzpatrick, who will be the incoming CEO, she's been there with Terry along the way. She's the CFO and the president currently. I think it will be a smooth transition. And I trust Lynn's ability to answer these critical questions on does the CME move in the direction to accept things like 24/7 trading in the perpetual futures. Yeah. The last thing I want to do in the first block of our program here is another purchase from Joe. You bought the XBI. Again, did you have the IBB? No, I had the XBI. Bought the XBI back in the fall of 101. Sold it out at 130 in March. Look, now that we have 52-week high, by the way. Now that we have this apparent resolution to the military conflict in the Middle East, you're seeing the broadening out occur once again. That takes you back into areas of the market, specifically like healthcare and the sub-industry being biotech. If you pull up a chart, that chart is a clean breakout. Yeah, it's a pure breakout above 140. If you pull that back over 5 years, you'll see that we could get back up to that $180 level. I like what we're seeing there. There are names embedded in there like Gilead that are working well also. All right.
I remember making a meme that just said, "Be the glitch you want to see in the Matrix." That's one that got shared all over the internet. But while I was becoming a viral meme artist, I was let go from my advertising job. So I had to figure out, well, how am I going to monetize this audience that I'm building? When I started making memes, there was memes online, but they were mostly anonymous, and no one was really creating memes for their social media strategy. So I realized there was an opportunity there, a creative opportunity, but also a business opportunity to teach the art and science of memetics and how you can make your own. So I decided to start the first ever meme school. And I was a little bit nervous that no one would show up and take the class. And a bunch of people signed up for it. And I was sort of blown away. And I've been teaching that class now for a few years and have taught hundreds of people how to make their own memes. We live in a world where the economy is increasingly uncertain, and it's sort of a scary time for professionals and for creators. But growing my business just taught me how everyone has something valuable to share, and everyone can really build their own business off their own expertise. Hi, I'm James McCrae, and I am an author, an artist, and a meme poet.
S&P tech falling about 1.5% in the last 2 days, but the sector up, of course, 13% in just a month. Ray Wang is here, Constellation Research Chairman, AI Forum co-founder. Good morning to you. Does this all make a lot of sense to you or not?
AI drops everywhere, but the thing is, the market's pulling back. Right? It's waiting to see what's going to happen next. We've got 3 giga IPOs coming out, whether it's going to be SpaceX, whether it's going to be OpenAI or Anthropic. People are waiting to see what's going to happen. And of course, we've got the hangover on the Middle East.
What do you think is happening in terms of why things have dropped recently? We've been all wondering whether there's maybe this is kind of a rotation ahead of the SpaceX IPO. Do you believe that that's the culprit? I mean, we've even seen that in the context potentially of Bitcoin. If you believe that narrative, or do you think there's something else happening?
Well, I think it is the first. And what's happening is there's rotation before the SpaceX IPO. But we also have $7.78 trillion of cash on the side in money market funds. And we also seeing about 38 billion.
If that's true, why would there be a rotation prior? I'm not sure I buy this sort of we're falling now because everyone's taking their money in hopes of getting the SpaceX IPO.
We're mid-June. We're about to head to the Hamptons. Everyone's about to get out. No, but on a serious note, actually, what's happening is there are all these organizations that basically cash out before the IPO, and it's going to really be the retail investors that are going to pick up the SpaceX IPO.
Does that make sense to you? Do you think the SpaceX IPO is going to be? Would you want to buy it at the IPO?
No. I would actually wait for the IPO and wait for the first dip and then come in.
You wouldn't buy it if you get the IPO price?
If you can get the IPO price, I think it's going to be. You're going to see a dip afterwards. So.
You think it's going to fall below the IPO price? Is what you're suggesting?
I wouldn't buy the first trade because it's probably going to, who knows what that's going to be.
We don't know what the first trade is going to be. It's going to be like Facebook. When you think what Facebook came out was on a high, then it dipped, it's going to come back, and you're going to go. It'd be unusual.
It's possible, but it's something that's have to drop below the IPO price.
You're predicting that? I don't think it's a drop below the IPO price.
Then you would buy it on the open. I mean, you would buy it if you could get the open.
JP Morgan, Goldman Sachs.
Robinhood or 100 shares for you, offers you the shares. I would take it.
You would take it.
Yeah.
Okay.